In this video, guys, let's talk about flag price targets. Stay tuned. Hey traders, warm welcome to you. All right, so flags, one of my favorite type of trading setups and strategies. There's a lot of things that go into kind of selecting the flag. In other words, how does it happen? Does it break above a high? Is there volume? And it's very personal, and you can kind of adjust it to suit you. But one of the things that's kind of a big question often with flags is, well, where do I have my target? If I want to take the flag, what do I look for? What's the high? Am I looking for kind of, to zoom off into the stratosphere, or, what I'm looking for, prior highs? Well, it depends on the structure of the flag, and it depends on how long the price is retracing in the flag. So let me give this example. So imagine this is a flag, and it happens to be right this second when I'm doing this. Could be on a daily chart, could be any instrument, whatever the situation is. Is this really one of the flags that you kind of take? Maybe it is, but one of the good things you like to see in a flag is a good strong pole, good solid long pole, and then a limited retracement. But we're talking about targets for now. Let's not kind of digress into other things here. I've talked about flags loads of times before on the whiteboard, etc. But very often, if it's a very short retracement and it's a little pause, and there's a catalyst, i.e. an external driver, some sort of news, if it's a stock, maybe company news, if it's an index, maybe it's interest rate news, currency interest rate, something like that, maybe earning, economic report, whatever, then you can stretch your target high. If it's a very, very short-term pause, let's say I'm on a 5-minute chart here, let's say it's 5 minutes and then immediately it's back on, whoa, that's a significant situation you're in. So, you can be quite aggressive with your targets and go, well, maybe we do the same distance that we had from here to here, back up to here. And you kind of use that as a rule. And that's kind of not a bad rule of thumb to use. Now, the longer it stays in the pole, or the longer it stays in the consolidation on the flag, then the more you're going to kind of bring that target down, in my opinion. So what does that mean? So basically, the longer you're staying in here, and it depends on your thesis of the trade. If it's a momentum ignition trade, which is what I'm kind of assuming here. Now, if it's a broader, hey, I've been looking to get long in this market for a while, and I've got a kind of 4-day outlook on it, and this has just happened in the first 30 minutes, that's different because you've got a longer thesis. But if we're just literally saying raw momentum ignition, there's no broader thesis in play, I'm looking for a setup, then as it starts to, the longer it sits in that flag, the closer you're going to bring your target. And you might even, if it's sitting there for a while, this is the kind of thing that you probably see a trigger. If you saw a little trend line break, we talked about this in a couple of videos ago, I think, this little trend line break here. If a little dip below, little trend line break, if you saw this kind of scenario and it took too long, you might say, well, actually, you know what? I don't think we're going to break the high. Maybe I'm going to look for 50 points from this trade. Maybe I'm going to put a stop below there. I'm going to have a 20-point stop. I'm going to look for a kind of 2.5 to 1 or whatever the case may be. And the longer it stays in here, the less likely you are to take it. But if you're already in it, you can start to be less aggressive or less demanding of your final targets. And you can say, okay, do you know what? It's lost the puff. It's lost the steam. Volume's declining. Time of day slightly changed. Whatever the situation may be, the catalyst is worn off if it was a longer term catalyst. I'm only going to look for a little rhythmical retrace. So in other words, push up, I'm just going to look for this. I'm not going to look for anything. There's my Twitter alert. I'm not going to look for anything significant in terms of pushing to highs, moving to highs. I'm just going to look for almost a mean reversion. So you're flipping it from a mean reversion type, from a kind of momentum ignition type, yes, range expansion, to mean reversion within the flag, if that makes sense. So it's kind of changing what you're expecting from it. Now, you might say, well, Mark, I'm going to dump it if that's the case, and that's fine. If you don't feel like you want to take that or you're in it, then by all means dump it. But another way to look at it is to say, well, okay, of course, if it's stopping you out, let's say it'll stop at this level, you're out of pinged. But if you're still waiting for that trend line break, you're still waiting for this and it hasn't happened, of course, you're not in yet, but you start to change and mold the trade target and stop dynamically. Of course, if it's drifting lower and lower and lower and lower, you never take the trade. If you get the trigger and it breaks through, and that happens to be your trigger, you might say, well, actually, because we've kind of done a deep pullback here, because we're sat in here, because we've done this, I will take it, but I'm only going to look for a little pushback to there, and maybe it's a half-size trade. If you're very short-term pullback, you can say, yeah, I'm looking for here. I'm going to scale it out into highs, or I'm going to wait and see how it responds to highs. If it retraces back off the high, then I'll drag my kind of exit up, and as soon as we kind of come back off the high here and back into that zone, I'll cut it. I'll take the money off the table. So different ways to play it, different ways to kind of not be so fixed about your exit. Now, there's a subtle distinction between being fixed about your exit and just closing something because you feel like you should close it. This is adjusting it based on what you're seeing before the thing even starts to get moving, potentially even before you've taken the trade, saying, well, maybe because of what I've seen now, that, I can't be as aggressive with my or can't be so ambitious, should I say, with my target. Now, things might change. It might just suddenly start to rip again. You're in, you get good momentum ignition like you did back then. And of course, you can be a bit more dynamic and go, well, I'll stretch it. I'll see how it runs. I'll see if it plays out. So something to consider, guys. Very often obviously the market is very dynamic, it's changing all the time, but something to consider is how does that affect your target, especially when you're kind of trading a flag based trade. Now, if this sets up and you break that trend line, where do you come out? Maybe you're not going to be quite as ambitious with your target. Maybe you're kind of going to break it, and maybe it comes to a point where the trade's no longer worth taking. But anyway, something to think about. Take care, guys. See you next one. Keep your risk managed. Bye bye.